Hi, I'm Peter Rose, founder of Longwood Currency Trading. Why do I trade Forex? I've been asked that many times, and I actually, I don't know, 8, 9 years ago, 10 years ago, on the Longwood Currency Trading website, I dedicated a page actually to that. So if you go to my website, longwoodcurrencytrading.com, to the currency trading page, down the page a little bit, I list 7 reasons why I think the Forex market is the best market that we as retail traders can trade. And that's the simple answer. And, you know, if you don't know what my background is, you need to know that in order to put any validity into what I'm saying anyway. So I've been involved in looking at general financial markets since the mid-1970s. I'm an old guy. I've traded stocks. I traded stock options for 4 years unsuccessfully. I've studied commodities, futures, and in 2007, I discovered the currency market. Prior to that, I was a software engineer for 33 years, or I was in the process of working through my software engineering career. And I did 40 years as a real estate investor and was able to retire out in this beautiful home in the mountains of the Lakes region of New Hampshire, which I was able to pay cash for without even selling my other home first. So I know a little bit about the financial markets, and I've experienced many of them, either from a study standpoint or actually participating in them. So that section of the webpage gives 7 reasons why the currency market has advantages over things like the stock market and the futures market and even real estate, which I would never go into. I mean, I own real estate right now in my house, but I sold everything else off for many reasons. And in the process of consulting, in investing in real estate, the people always ask me, well, what do you do? Or how would I do that? How would I get started? So I've talked with people a lot about how to get into real estate and how I did it and why I did it and all the great benefits that there are. And now my tune on that has changed to, well, maybe real estate isn't the best investment right now, just because there's so much uncertainty in the market. And that's one of the benefits that I saw in the currency market. And I mentioned that on my website. So you can get out anytime. You get into a trade and you go, oh shit, this isn't working out. The price doesn't have enough momentum. It's just kind of, I got in and it went up a few pips and then it went up another couple and now it's down 2. Well, that isn't according to the requirements of my entry analysis, the rule for entry analysis. So I should just get out. Oh, but Peter, you haven't had a chance to let the price go. Well, that's okay. I'll lose 2 pips or 4 pips or whatever it is. And I may do that 2 or 3 times. Because you never know. That entry, when you take it, is a jump ball decision. Your analysis puts a higher probability on it. But that next move is a jump ball decision. Since you're paying the VIG to get into the trade, which is the spread, which, depending on your broker, you're 3/4 of a point to 3 points, sometimes 15 pips. But generally, a 1.25 pips, 1.5 pips, something like that is your price to play the trade. So when you enter the trade, you're 1.5 pips behind anyway. And if it goes a 1.5 pips in the other direction, just because everybody else happens to be getting in at that time, you may be as much as 3 or 4 pips down just entering the trade. So I don't get out right away because a lot of the times the price will recover. But if it recovers and it stays there and it hovers around a little, well, why would I stay? I'll get out. You can't do that in real estate. It takes a little bit of time even in the stock market. If you have a preponderance of orders moving in one direction, you may not be able to get your order out. If you're trying to sell in a market that's going down, there's there's a rule that prevents you from doing that. If you're in commodities, there's a lock limit rule. Price can move dramatically, and the exchange shuts trading off. So all of these things that are in these other markets, if you don't know about them, then you might be tempted to go in. Now, there's plenty of people that trade options and commodities successfully and all that stuff, but they're assuming an inordinate risk that the currency market does not have. So if trading is all about risk management, then why wouldn't you go to the most likely table where the odds are in your favor? If you're going to go into the casino, the best odds in the casino overall is pass line craps, 1.14% against you. That's it. You want to play 36 to 1 against you? Go throw the roulette wheel, okay? Or play hard tens or something on the field in craps. I mean, come on. For those of you that are looking to get into Forex and you see the bodies all around, I mean, there's a statistic, it's called the 90-90-90 rule, and it was brought out by a really large, major Forex broker many, many years ago. This is 2025 when I'm doing this. This is a long time ago. But traders are the same no matter what the year is. They did a survey, this broker, of their retail Forex traders, 25,000 customers, 43 million trades, and they found that 90% of their customers lost 90% of their money in 90 days. And the funny thing was that of the 90% of the customers that lost money, 72% of their trades were profitable. And so people look at that statistic, or they go in with a couple of mini lots and they get wiped out and they go, oh, this is horrible. I'll go trade crypto. Because they don't understand the financial markets themselves. Where is the least risk? I did real estate for 40 years. At this point, I think that real estate has more risk than the currency market does. In fact, real estate has implicit risk regardless of the state of the market. More risk than the currency market would have, because you can't get out in a panic situation. In a panic situation, you can get out of the trade, and that's your first concern. That's also your first problem from a psychological standpoint in trading, is that you hang on to a bad trade because you got into the trade with full conviction that it was going to go in a certain direction. And we fall in love with that trade. We're convinced about it. And we stay in. Oh, well, it'll bounce off the 55 period on the 15-minute chart. Well, it didn't do that. Well, let's go up to the 4-hour chart. We'll wait for that. Well, I got to wait 10 more pips for it to go up there. Well, look, Slick, you're already 30 pips down. You're going to wait another 10? I mean, how bad are you going to let this thing get? I know what I'm talking about. I've let trades go 200 pips to margin call. Why? Because of our humanity. And that's why when I developed the life cycle of a currency pair with the 3 problems of entry analysis, position management, and exit methodology, that I looked at developing conditions that satisfy each of those rules that will mitigate to the best that I can do the 3 bridge troll psychological problems that we have in anything that we do, which is hope, fear, and greed. Now, if you think that with no prior exposure to the financial markets, or even with exposure to the financial markets, if you haven't studied the psychology of the human animal in trading, you really should do that, because that'll tell you all about hope, fear, and greed. And then you need to learn about the mechanics and the plumbing of the various markets that are out there. Maybe Forex has something that you don't like. You don't trade Forex as a position trader, letting it run for days and days on end, unless you're willing to risk your account. You see the problem involved if you don't look or have somebody counseling you on where all the dangers are, and then proving to you that whatever it is that they're going to teach you is going to do the best job of mitigating those risks. So when I stepped back from that from the trading in the market and a $40,000 loss, I said, wait a minute, I've been solving the wrong problem. What's the real problem here? Oh, it's this. Well, how do I solve that problem? Well, it's too big. So I broke it into 3 problems. And I called that the life cycle of a currency position. And the 3 problems are, what do I do in entry analysis? What do I do in position management? And what do I do in exit methodology? And I wrote 3 rules. 1 rule for each problem. And each rule consists of 2 to 4 conditions. And those conditions are in sequential order. The rules are in sequential order. I can't have position management until I have an entry analysis. I certainly can't have an exit methodology unless I have an entry and a management. And so that's in sequential order. If I didn't have sequential order to the problems that I'm addressing to the currency market, and I guarantee you this is the condition for all education that's out there for the retail market, is they do not have the problems in sequential order. It's like, all right, here's how you get into this trade, and you're going to use Bollinger Bands, and you're going to use this to determine if you get in, and here's the Fibonacci, and this, that, and the other thing, and order flow, and blah, 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 and you're going to get out at 20 pips. You're going to set your 20 pips, leave price room to breathe, and it's just a fire hose of ridiculous chicken shit. And I realized that as soon as I laid out my rules and my conditions. Because look, if those 3 problems were not in sequential order, I would have 21 different permutations I could arrange those 3 things in. No, in mathematics it's called permutations. If I have 2 things, there are 4 different ways I can arrange those 2 things. I can have A by itself, B by itself, I can have AB together, or I can have BA together. 4 different permutations for just 2 objects. If I have 5 objects, I have 325 different permutations. So if you're talking about RSI, Bollinger Bands, Fibonacci, stochastics, what's another one? London Open, there's 5 right there of the more common ones. There's 325 different ways you can arrange the, I guess, the importance of those. I'm going to put more importance today on the RSI and then the stochastics. Tomorrow I'm going to do stochastics and RSI. The next day I'm going to put stochastic and RSI on the same importance level. No wonder 90% of the traders lose their money. No wonder you're not successful in what you're doing if you've been consuming the same information that I consume. We've both been sold a line of shit by people who are either institutional traders who think they're going to come down and teach retail trading. They can't, and the rules that they have are invalid. Some people can make them work. Just like a blind, as my stockbroker once told me, even a blind pig in a snowstorm will get the right trade if he looks long enough. So you can't depend on luck. And you can't depend on somebody who just stumbles their way through the minefield and gets to the other side and turns around and says, oh, I just got through the minefield. I understand how this stuff works. Come through and I'll show you how to do it. I got into the currency market because of the structure that I saw available. I didn't really analyze that structure the way that I should have when I put $45,000 at risk, because I trusted the people that were conveying information. Guys had made millions of dollars trading. I want to know how to do that. But they don't know how to teach you how to do that. They only know how to teach you what they're doing now. But what they're doing now is not how they made their millions of dollars. I guarantee it. I've got a degree in physics, almost a minor in math. I didn't just fall off the boat. I know how to separate bullshit from that. And I made the critical error of, instead of depending on myself to figure the solution of the currency market out, I relied on them. And that's what happened. After I figured those rules out, again, it took me 15 minutes. I said, okay, I've got this. Let me try this. So I went back into demo and I just tried it to make sure that nothing was going to go completely stupid, that I missed something before. I was hoping I wasn't going to miss anything now, even using 33 years of experience in solving complex problems. And I did great. So I took my the remaining $5,000 that I had, and I just about doubled that in 4.5 months. I was $200 short of doubling it in 4.5 months. And then I said, okay, I think I've got this. It took me 4.5 months to lose $40,000. I've just now successfully doubled this account in 4 months. So I think I've got it. Does that mean I could take a $50,000 account and double that in 4 months? No, it doesn't mean that. And I know the math and the reasons why, because I did the correct analysis. As you increase in lot size and bank size, your rules have to be flexible enough to account that into the rules. If you don't have rules, first of all, that are in sequential order, and those rules aren't condition-based, if you just say that you rule, if the trade goes against me, I'm going to close out at 10 pips. That's not a fucking rule. That's what you do. That's a condition in a rule. If you are not having the success that you feel that you should be having, it's because you really don't understand some of the critical things that are in the currency market. And those are not bad things. Those are bad things if you don't understand them. As I found out the hard way, it cost me $40,000. That was an expensive lunch, right? So if you're not having the success that you think you should be having, it's not because you're stupid. It's not because you haven't read enough or taken enough information in. It's because you don't know how, first of all, to identify what the key information is that you need to know. You don't really know how to organize that information so that it makes sense. Some of it needs to be in sequential order and some of it is on demand at runtime. But you need to be able to differentiate that, because when you're building your trading plan, it's broken into 3 parts. And one of the parts of the trading plan is what we call the framework for your rules. And that forms the basis of static information that acts as input into the dynamic rules that you have at runtime, which is entry analysis, position management, and exit methodology. That's what I can help you with in my fast track course. Am I pitching you a course right now? No. I'm just telling you that there is a solution for that. And if you can follow the bouncing ball through my over 500 videos that I've put out, maybe you'll be able to string that together. However, I would suspect that if you're successful in you've been trading, you're just not successful at it. You've traded a real account, live account, no demo accounts. I can only help you if you've traded a real account, at least $1,000 for 6 months to a year. So you got 50 to 100 trades under your belt. You're not trying to do this up on the daily. I can help you if you've been trading on the daily, but you have to have been trading a live account. I teach day trading because it's in day trading on the 5-minute chart. You do multiple time frame analysis. I'm working up on the 4-hour chart on a daily basis. But you are day trading and actually executing trades on the 5-minute chart. 5-minute candles, generally on the 5-minute chart, have an ATR of around 5 pips on the majors. Okay, so at 5 minutes, you have 12 possible decisions an hour that you can make. 24 decisions over the 2-hour period of time that I'm teaching, that the Fast Track course is geared to teach you to trade within. Day trading doesn't mean sitting there all day. You don't have all day to trade. You have 2 hours in the morning before you go to work. That's when you trade. So let's build the trading plan to satisfy that. I mean, I just don't understand. Well, I do understand why people are presenting such shitty trading processes, because they're not educated to do that. I'm a professional educator. I've been involved in martial arts and karate and self-defense for 57 years. And I've been teaching karate and self-defense for probably 54 years of that. I know how to teach important stuff. I know how to organize it. And I know how to present it to people who are afraid that when they go out at night and they're in that dark parking lot, what's going to happen? Probably nothing. But what if it does? That's the solution they're looking for me. Not to go into tournament fighting, but to learn, what do I do? How do I stand? How do I back up? What do I look for? Where do I go if I'm going to be confronted with a fight? Somebody's coming after me. Where do I go? Do I just stand and do that there? No. And then what do I do? What are my first actions? Does that sound like a complex problem to solve? It's pretty complex. And yet, many of my students have had to use martial arts in their training to save their lives, or at least fend off attacks, knife attacks, getting thrown down on the ground and having pig piled on you. That's what the currency mark will do to you. It will pummel you. And so what I'm hoping is that through my experience and why I'm doing it, if I have any authority with you at all, that the reasons that I've selected the currency market to trade and have found a methodology which lays out sequential rules that are condition-based, that make sense, and I can tell you what those all are. All you have to do is send me an email and I'll talk to you about it. And if you have a specific problem that you're experiencing in your trading, I'll help you with that. Because maybe if I can resolve that one problem, that you'll go, that's it. And you'll go off and you'll be able to become consistent in your trading. If I can do that for you at no charge, that's great. That's my martial arts background. I'm obligated to share, and that's my sharing. And if you have a single problem, an individual problem, I can help you with that. But if you come with me with a problem that involves solving a problem with a process, in other words, multiple steps, it isn't just, geez, I'm getting 10, 15 pips in profit, and then I lose 8 pips. I mean, well, what can I do? And I don't get that opportunity to get 8 pips in profit that often. I'm usually 3 to 5 pips, and I can't seem to get that 8 pips very often. And then when I do to get 8 or 10 pips, what do I do? That's something that I can work with you on. But if it's more than that, if it's a trading problem and not an instance problem, I can talk to you about how you go about building an educational plan that will solve that. Maybe that will help you go out and do it on your own. I don't have the bandwidth or the time, I'm retired, to work with hundreds of people because it's my time that I spend with you. That's what the Fast Track program is. It's a PDF file that lays everything out so you've got the map. But I'm the guy that's going to work with you for hours explaining to you what the important points are on the map that you might really want to focus on. And you can ask me questions in real time. My students can send me an email and say, hey, I just had this trade and it went bad on me, and this is what the surrounding situation was. What can I do? I go, okay, send me the transaction log. Show me what happened. Show me what happened a couple hours before and that you were trading. What were you doing and what happened in this trade? Let's talk about this. Let's figure it out. I do that all the time. And the comment that comes back is, really? Well, I know that. So I know you know that, but you didn't know it to the forefront of your mind. Now you do, because of the experience and the way things are laid out. Because I don't have a magic secret sauce to give you. I have a process. It's called the life cycle of a currency position. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.